we're going to go to the clerk, but the question is, would you like it on the website? Somebody.
Yes, if everyone is in agreement with that.
Is everybody okay with that? Yeah, okay. Yeah, we do have agreement.
Merci.
Okay. Merci, MP Sainte-Marie.
Thank you, MP Sainte-Marie.
Now back to our witnesses, and for opening remarks, please. Thank you.
Okay. Merci et bonjour, Monsieur le Président.
Good morning, Mr. Chair and members of the committee. Thank you for the opportunity to speak with you about OSFI's report to climate change. I'm joined today by my colleague, Stéphane Tardif, also my friend, Director of OSFI's Climate Risk Hub. Climate change is a financial system risk because it will alter the cash flows generated by some financial assets and businesses. For example, stronger and more frequent natural disasters are changing the economic fundamentals in some insurance segments.
This is to contribute to public confidence in the Canadian financial system. To fulfill our purpose, we must ensure Canadian financial institutions manage the risks that could impact their safety and soundness. Among these risks are the physical and transition risks associated with climate change. We have made tremendous progress towards this objective over the last 18 months. We created a new climate risk hub, which Mr. Tardif leads, and we've grown his team to over 30 people from about 2 just over a year ago, all of whom are dedicated to leading OSFI's response to climate-related risks. On March 7 of this year, we released our first ever guideline, B15, on climate risk management to accelerate Canadian financial institutions' readiness to manage climate-related risks. When developing this guideline, we met with representatives across all sectors, including members of the public in all regions, to better understand the impact of our regulations on their businesses. We received over 4,300 submissions during the most extensive consultative process in OSFI's history. Our consultations produced a balanced, sensible regulatory approach that will help Canada's financial system navigate and adapt to the uncertainties and risks presented by climate change. Our supervision of climate risk management is not one size fits all. It enables the institutions we regulate to adapt their approach to climate risk management in a manner that supports both competitive and prudential aspirations. That said, we acknowledge that we have a bias towards early action in adapting to climate change, and one might ask why. Our climate scenario analysis indicates that a financial system that starts climate change adaptation early and progresses more gradually on this path is a sounder financial system. Thus, our approach stems from the underlying purpose assigned to OSFI by Parliament. Thank you very much, and we're happy to take your questions.
Thank you, Mr. Rutledge, Mr. Tardif. It's good to see you guys here in person. And we're going to start with the members' questions in this first round. We have the Conservatives up first, and MP Chambers for 6 minutes, please.
Thank you, Mr. Chair. Welcome to committee. It's great to be in person, much preferable over Zoom. Before I get to my questions, and I do have them, and I respect your time, I just want to read into the record a motion that was served on the committee, not for debate, but just to put it on the record, that the committee call on the government to extend the tax filing deadlines for the 2022 tax year to 25 business days after the labor dispute is resolved between PSAC and the Treasury Board Secretariat. As I say, I don't intend to have that motion debated today, Mr. Chair, but wanted to put that out there and hope that we have a speedy resolution to the labor dispute. Now, Mr. Rutledge, appreciate you coming and joining us. Important study proposed by my Liberal colleague. I'm curious about B15's guidelines and the cost of compliance that a financial institution might bear. Have you thought about, or have you measured what the costs of compliance are expected to be for certain financial institutions?
Well, I mean, the answer to the second part of your question first. Measuring the exact cost is not something we've asked them to do. They're, institutions we regulate are more than happy to come to us and tell us what the burden is. And I think to go more deeply into that question, I think I'd like to sort of reference one key aspect of our system. We have some very large financial institutions that have economies of scale in regards to disclosure, and then we have some very small ones. And so when we designed this guideline, we designed it with that in mind. And so to help them manage through increased costs, we've given smaller institutions an extra year to come into compliance with disclosure. For the larger institutions, they're already, if you look at a large insurer or bank, their quarterly reports are 200 pages or more. And so adding additional disclosure on climate change, given their already substantial scale built in disclosure, we don't think will be material to them.
But aren't there requirements for climate scenario analyses and other work that the institution has to do in order to produce the disclosure?
Yeah. Over time, there will be a rising burden around scenario analysis. The diligence and risk intelligence that will come out of that will produce lower credit costs, we believe, over time, and will more than pay for the additional costs. And even if we didn't oblige them in the way we have in B15, which I acknowledge, whether it was for their board of directors or for bondholders in the fixed income instruments they issue or in their equity holders, they'd be doing this analysis. It's sound, sensible prudential management to understand and try and quantify climate risk and the impact it might have on your book of business.
I mean, if they would be doing it anyway, why do they need the regulator to dictate
Yeah, it's a good
what
question.
needs to be disclosed?
It's a good question. There's a variety of reasons for it. The first one is, as I said in my opening statement, we have a bias towards earlier action. Our system will be sounder if we oblige the institutions we regulate to move earlier and sooner on this and to begin to do this a little bit before maybe other institutions. The other reason is Canadian financial institutions operate in a global context. They raise funds from outside Canada in order to invest within Canada. Their investors outside Canada expect this type of discipline from those institutions, and they also look to the regulations OSFI put in place, and they're measuring how responsible a financial system Canada is when they do that.
Okay. Thank you. I'm very curious about Principle 5, that OSFI may develop a separate chapter with respect to capital and liquidity requirements. Are you going to increase the capital requirements for companies that lend to oil and gas?
So to answer that question, I'd like to spend just a minute or two.
Well, I don't have, I really want to,
Okay.
I only have about a minute left.
Okay, I'll
so
try and be
30
very, very
seconds.
brief. It's a capital risk weightings are very technical. They're built bottom up from historic credit analysis.
Will they be? Will a financial institution be forced to hold more capital against a loan that an oil?
We're
and gas
not
company
changing
makes?
that approach.
Okay.
We will always be empirically driven in our credit risk ratings. Now, the problem is that credit risk analysis is driven by historic data. And the unique feature of climate risk is that we're talking about events that haven't yet happened yet, and we're trying to make predictions about the future. There's every intent on our part and determination on our part to make sure we maintain our empirical, prudential, rigorous standards. Any change in risk weightings should flow out of disciplined, bottom-up credit risk management in the way credit risk
But
ratings
that
are.
would be happening anyway. Like if a risk rating changes by a
Yeah.
third party,
Yeah.
that's already happening. I fail to understand why OSFI should be getting involved in climate risk analysis and disclosure when the private sector is already demanding it itself. And frankly, the discussion around climate risk policies belongs in that chamber over there called the House of Commons, and not necessarily by a financial regulator. This is, it seems to me a little broadening of the scope of OSFI's mandate, which we never debated, frankly.
Yeah.
And now we're moving to the Liberals, and I've got MP Baker for 6 minutes.
Thank you for being here very much. I have a number of questions, so I'll ask you to be as concise as you can, noting, of course, the complexity of the issues, some of the issues that I'm going to ask you about. First off, just building on the discussion you were just having with my colleague from the Conservative Party. So, what is OSFI's mandate? Like, for the sake of Canadians, for my constituents who are watching, and they're trying, who are these folks from OSFI, and what do they do?
There are two parts to that.
Yeah.
Our purpose is to contribute to public confidence in the Canadian financial system. That's a broad financial stability instruction.
Yeah.
How do we do that? We do that by supervising financial institutions. When we identify risks through that supervision, we oblige boards of directors to take prompt actions to address those risks. We put in place guidelines, principles-based guidelines to manage those risks. And we watch broader systemic trends and make sure the industry is prepared to deal with them as early as possible.
So what happened if we didn't have OSFI, if we didn't manage those risks, or make sure we were managing those risks? What could happen to Canadian, from this perspective of a constituent? What could happen?
Well, generally speaking, systems that don't have strong prudential regulation, financial systems, tend to be more volatile, and that volatility comes at a cost to the economy. So more unstable banks that tend to fail more will mean your economy will be weaker. So we built up this system of regulation in order to keep our economy strong.
So in a worst case scenario, for example, you might see a bank default, or if you didn't have, if they weren't properly
It's
managing
happened
the
in
risk.
Canada before, not for a long time, but it has happened.
But we've seen it in the United States recently with
Last month.
Last month. And so people could go to the bank and ask for their deposits, and the bank could say, we can't live up to our commitments, we can't get you your money back, for example.
Right.
Or mortgage rates could be affected, or the housing market could crash like we saw in 2007, 2008 during the financial, things like that could happen. Is that fair?
Yeah, I live that every day.
Okay. So your role in regulating risk in our financial system is super important, not just it's not just something that affects the banks, it affects Canadians every single day.
Yes.
Okay. So when we talk about climate risk, so can you talk about the kinds, before we get into climate risk, could you just talk about the kinds of risks that OSFI ensures that the banks are properly managing?
Yeah. So, Mr. Chair, traditionally, bank regulators and insurance company regulators look at credit risk that you make a loan and people don't pay you back, and investment risk, the risk that you make an investment and you lose money, and liquidity risk, the risk that someone asks you for what they're owed and you can't pay them back. That's the core thing. What we've learned, particularly since the global financial crisis, is risk environments are growing more complex, and risks that don't appear to be financial actually have a very strong can have strong financial consequences. Corporate governance would be a risk area. Cyber risk would be a risk area. Reliance on third party for critical services would be a risk area. Climate has emerged as a risk that has the potential to have real financial impacts on financial institutions. And so were we to set climate aside and not oblige our institutions to deal with that risk, in our judgment, we wouldn't be fulfilling our purpose and mandate.
So I have about 2 minutes left, 2 and a bit left, if I'm not mistaken. 2.5. So in terms of the climate risk, like you've talked about these other risks that you're ensuring that the financial institutions, the banks, are managing. Mm-hmm. You've talked about what the implications are if banks don't manage these risks.
Right.
You've recently added climate assessment of climate risk as part of that. So what are the implications of not managing climate risk?
There's a variety of implications. To the point that was made earlier, some institutions would still get at this and would manage their balance sheets in a pretty responsible way. My experience is that if you don't have rigorous regulations, there's always institutions that are less inclined to do that, to use a word, shirk. The problem in the financial system, one bad apple can make things really costly for all the other good apples. And so part of regulation is to make sure that everyone is operating to a specific standard. We do it with mortgage underwriting and a guideline we call B20. That's a classic example of bringing everyone in the system up to a minimum level. So that's a core reason for why we should do it. The other reason we should do it is because our institutions are internationally active. They raise money overseas, and they use it to make investments here in Canada, whether it's in residential mortgages or business loans. If we're not seen, if our institutions aren't seen to be managing this risk intelligently, and one of the criteria is the regulator serious about climate risk, then their cost of funding could go up. And we're very sensitive to investor perceptions about the strength and reliability of Canada's financial institutions.
So in 20 seconds, if I could ask you, what is the worst case scenario if climate risk were not being managed by financial institutions? What could happen from the perspective of
So
my
in our
institutions?
climate scenario analysis we did last year with the Bank of Canada, we did look at that. And what happens is the longer you delay adapting to climate change, the greater the risk of financial instability. And so if we stopped all this today, would the system buckle? No, probably funding costs would go up. But in the 2030s, when the impact of climate change and the impact of the transition that other countries are making started to be felt, there would be a rising risk of financial instability in Canada.
So basically, managing climate risk is not an expansion of your scope. It's core to managing risk within the financial system and
We see
protecting
it
the
as-
savings and the housing market and the loans that Canadians rely on every day.
We
Is
see
that fair to say?
managing climate risk as core to our purpose and mandate.
Thank you. That's
science-based by
the
Parliament.
time. Thank you, MP Baker, Mr. Rutledge. And now over to the block. And MP Sainte-Marie, please, for 6 minutes.
Merci, Monsieur le
Thank you, Mr. Chair. Thank you for coming, gentlemen. I'd just like to add that we share this vision as well, 100%. I'd like to ask you a question about your BF15 guideline. First of all, as it was presented last month, I'd like to ask you, how did the institutions react to a guideline B15?
Thank you. That's a great question. The institutions we regulate have an eye towards how Canadian institutions are perceived by Canadians, certainly, and by investors globally. And so they accepted the premise that we needed to have a regulatory regime around climate change. This consultation we did over the last year was characterized by a great deal of give and take with institutions of all sizes, and we calibrated our guideline in a way that made it manageable and adaptable for the institutions in question. They would tell you, I think, and they have said this publicly, that they're very concerned that we would abruptly increase capital requirements for climate risk and do so in a way that, quote unquote, unleveled the playing field. We will not do that. We will take concerted effort to make sure that we're quantifying and measuring the risks associated with climate change, and then ensure our institutions are managing those risks with all the other risks they have, and ensure they have ample capital and liquidity buffers for all risks. So if something goes wrong you don't expect, the institution absorbs the hit and keeps going.
Excusez-moi, j'avais un problème de...
Sorry, I had a coordination problem. I apologize for that. Thank you for your answer. This guideline B15, how would you compare it to what's being done both in the United States and Europe right now? Stéphane?
To the work that we did to benchmark ourselves against other jurisdictions, this is something we spent a lot of effort doing. I would say, just to give you some hard evidence, some of our peer jurisdictions, for example, the UK, has had similar guidance in place since 2019. The European Union, under the European Central Bank and the European Banking Authority, have had these expectations since probably 2020 and are now supervising their financial institutions against those expectations and incorporating the effectiveness of climate risk management in the risk assessments that the European Central Bank and the European Banking Authority are doing. So I would say what B15 did was raise our expectations and bring us in line with what's happening with our G7 and G20 partners.
Merci.
Thank you. A more technical question. Section 3 in Chapter 1, I don't know if my colleague Adam Chambers was referring to this because he didn't give the same numbers, but will this be a separate chapter in the next guideline?
Okay. So, Mr. Chair, given that climate-related risks are the management of climate-related risks are relatively nascent, and our understanding of the trajectory of how these risks will manifest within our system is evolving. We felt it was important to signal to market that Guideline B15 will be iterative. It will be evergreen. And B15 in March was simply the first 2 chapters of that evolution. So we felt, in the spirit of transparency, that we would tell the market and tell industry that we are continuing internal efforts to understand how to incorporate climate scenario analysis, for example, to understand the data needs that institutions will require. So there's an evolution in the thinking, and we're simply saying that there might be additional chapters that could touch on things like scenario analysis, capital, liquidity, and other topics.
Merci.
Thank you. My time is limited, but one final technical question. Principle 2 of Chapter 2, the institutions have to communicate exhaustive and information. What are the standards that you're imposing? Is it based on the size of the institution? And what is being asked? Are European institutions being asked to do?
We grounded our disclosure expectations in the FSB's Task Force for Climate-Related Financial Disclosures. I would remind the committee that this standard has been in practice internationally since 2017. Many of our institutions have voluntarily signed up to the TCFD and are already disclosing along that framework. We also proportionally phased in disclosure requirements based on the size and complexity of our institutions. So the largest, most complicated financial institutions will start to have to disclose in 2025, and then we phase those in subsequent years, depending on the type of disclosure. They are meeting international standards. I would say, for example, what's coming internationally with the International Sustainability Standards Board. We are bringing our institutions to a standard of disclosure which is already in practice in many other jurisdictions.
Merci, MP Saint-Marie. And now to MP Blakey, please, for 6 minutes.
Thank you very much. I'm going to take just a slightly different tack than what we've been discussing so far. Last day we had the Parliamentary Budget Officer here at committee, and I think we had what I think was a good and constructive conversation about carbon pricing. And we kind of identified that there's 3 considerations in respect of carbon pricing. So there's, kind of cash out, cash in respect to the rebate. Then there's the further kind of calculation of kind of wider economic cost to Canadians as a result of carbon pricing. That's not necessarily what they pay directly as a charge, as it were. And then the other category was the kind of benefit of emission reduction over time. And what the Parliamentary Budget Officer said was that he's looked at the first category, he's looked at the second category, but that there's really there's not enough certainty and there's not an effective modeling to try and figure out what kind of consumer savings would be generated by lowering carbon emissions in the economy over time. I'm wondering, because now you've undertaken this work, you're requiring investors and companies to do climate scenario analysis. I'm wondering at the extent to which the models that are being developed for risk assessment might hold some promise to be able to make some projections about kind of the consumer impact of emission reduction over time, so that we could calculate that into an overall assessment of what a carbon price actually costs Canadians as a net benefit or net cost.
Yeah, Mr. Chair, the analysis proposed, just to be clear and straight, is that would be a second order analysis. In other words, we need the first wave of analysis will be understanding the extent of financial institutions' exposure to assets or investments that have a emissions component to it. And then to try and understand, all right, what happens over time as the cost of those emissions goes up. That's like the first step, I think. And then in time, if I were a bank CEO or chief risk officer, I'd want to start asking, what is the impact on the consumer wallet, and how might that affect consumer well-being and ultimately consumer credit quality? And then you might start to see people asking that creative analytical question, well, can we forecast out what the benefits are to the consumer wallet, and how might that affect? But we're a ways away from that.
I certainly hear that we're a ways away from that, and I think that, was the answer by and large that we got very clearly from the PBO. But I did want to kind of assess the promise of this climate scenario analysis for perhaps being able to deliver that, because I think, and this is not I'm not proposing that this is a problem for you to solve, and certainly not here at the table today, but I think the problem is that it'd be difficult to have an honest debate with Canadians about the impact of carbon pricing, because it will, the analyses will be skewed against carbon pricing as long as we can quantify indirect costs to consumers without being able to quantify indirect benefits. And so there is a kind of structural deficit in the empirical side of the argument that's going to favor arguments against carbon pricing until we can quantify potential indirect benefits to consumers. So partly I just want to note that, and I want to take away from this conversation, and correct me if I'm wrong, that there is some promise in the work that you're requiring companies to do, or strongly suggesting that companies do as a regulator, that we might actually be able to one day quantify those indirect benefits once this kind of raw information is more readily available and more readily understood by various actors in the economy.
Mr. Chair, in the course of just normal credit analysis, the more kind of alternative views you take into risk, the more insights you reveal. And so an example would be, I know of a retailer that entered the banking business, and they found out certain trends in spending were very good predictors of the creditworthiness of customers. So, for example, people who buy felt tips for the floors or for the bottom of their chairs, they tend to be better credit risk. That's what the data shows. That type of insight, we're not there yet, but it's not unusual for that to emerge when you take a different view into risk.
Okay, well, thank you very much for that. I wanted to ask, I think, kind of following up on Mr. Baker's line of questioning about, what the consequences are of not being able to do this kind of work. And you had talked about foreign capital markets and the fact that, Canadian financial institutions and other Canadian players go into foreign capital markets in order to raise capital for investments here in Canada. Has there been in your journey up to here an attempt to kind of quantify what the negative effect on foreign direct investment could be for Canada if international investors or financial institutions in other countries lose confidence in the Canadian financial institution because it's, in their opinion, it's not adequately preparing for climate risk, understanding climate risk, and integrating that understanding into its practices?
Mr. Chair, to my knowledge, there's been no international studies on that question, which is, what is the extent, how far would spreads widen in order, in response to a foreign financial or a Canadian financial institution maybe not being up to snuff on climate risk management. The banks we regulate have roughly $7 trillion in assets that they have to that they manage, that are on balance sheet. So 1 basis points of widening times $7 trillion is a huge number. And so it would be material, could be material.
Thank you for that. Thank you, MP Blakey. So that's kind of the end of our first round. We are moving into our second round. That's what we'll have time for, 1 full second round. We're starting with the Conservatives at 5 minutes for MP Chambers, please.
Thanks very much, Mr. Chair. Mr. Rutledge, I apologize on the chair's behalf. I did give you a chance to respond to my last comment, but I think we got that out in the previous rounds. But safe to say you think that the work of B15 is very core to OSFI's mandate. Is that what I understand you to believe?
Mr. Chair, we think our work on climate risk management flows from our purpose and our mandate.
Okay. What are the costs of non-compliance? What if a financial institution just doesn't disclose? What happens to them?
Mr. Chair, we have a principles-based regulatory system. So it's important to understand that B15 are not a set of rules and that there's a penalty, a speeding ticket, if you will, if they don't comply. There is an articulated level of interactions with boards and senior managers. When we, as a regulator, deem an institution to be out of line with the principles set forth in our guidelines. So, for example, if they're underwriting mortgages in a way that contravenes our guideline B20, we don't hit them with a penalty. We have a sometimes extended conversation about that. What I would suspect a board member or a senior executive would say if they were before this committee, what would happen of noncompliance? They'd say that the regulator would start off those conversations and would require, ultimately oblige is better than require in a principles-based system, ultimately oblige institutions to come into conformance.
Okay, fair enough. You brought up B20. It's their first time being here in a while. We've had a bank failure, multiple bank failures in the U.S., and some challenges even in our own mortgage market, which I understand OSFI is following very closely, extending amortizations. Do you think that financial institutions need to be more transparent about the amount of their books that have mortgage amortizations that are extending well beyond 30 years? Some banks have been forward with this information, and others, to my understanding, have not been as public with the risks that they're now increasing.
Mr. Chair, in our view, transparency is a risk mitigant, not a risk accelerant. As superintendent, I don't want to presume to guide boards of directors and senior executives on what to disclose and what not to disclose, but I will say sunlight is a very effective way to mitigate risk. In general, if I look at Canadian bank disclosures on mortgage risk and I compare them to other systems and to the risks that we see, they're pretty balanced. They can always do better, but it's not a major issue from our perspective.
In the last budget, there was a section on code of conduct for extending amortizations. Was OSFI consulted prior to that appearing in the budget?
Mr. Chair, that code of conduct would be put into place by the FCAC, the Financial Consumer
Fair
Affairs.
enough, but the question
We talk to them all the time. They sit on my
short.
FISC.
Okay, so yes, you were aware before it ended
Yeah.
up in the budget.
I wasn't aware of what was in the budget,
Okay, fair.
just to be clear.
But you were consulted
But
on. Okay, fair enough.
We talk about that with the FCA, those issues
Okay.
every day with the FCAC.
Thank you. Is it fair for someone who does not have a mortgage today to not be able to get a 50-year amortization from walking off the street, but someone who has a mortgage today, who has qualified, can get that unilaterally from their financial institution? Is that a fair state
Mr.
of
Chair,
play?
my job is to ensure that Canadian banks manage their risk. I'm going to try and
Well, we have-
give you a straight answer. It's just my job is credit risk and liquidity risk and climate risk and all that.
Right. But you also set amortization rates,
So
correct?
when you're thinking about amortizations and you're talking about lengthening amortizations, that is a feature of a particular product which goes by the name of variable rate mortgage with fixed payments. And as those variable
I
rates.
understand how they work, but
Yeah.
I'm asking whether it's fair that you're preventing people
Or so just,
from
you're going to need a very
obtaining that
short
same
answer.
mortgage product.
Mr. Chair, as superintendent, it honestly isn't in my mandate to determine what's fair or isn't. Lengthening amortizations increase risk to a mortgage, and we require higher capital for that.
First, and now we're over to the Liberals with MP Chattel, please, for 5 minutes.
Merci beaucoup, Monsieur le Président.
Thank you, Mr. Chair, and thank you for coming here. Much appreciated. I'd like to go back to a point you mentioned earlier. You said, and I quote you in English,
Financial impact on the financial sector. Pour les personnes
for Canadians who are listening to us and who are wondering in concrete terms, how does the climate change risk, how will this have an impact on the financial system? Have you got any examples of that?
The risks that flow from climate change, which would be physical risks or transition risks, add costs ultimately to a financial institution. So higher risk usually means some form of higher either credit loss or investment loss, unless it's managed appropriately. The earlier and more effectively financial institutions adapt their risk management policies to reflect climate risk, the more likely those costs will be lower. An example would be flood insurance policies. As floods become more prevalent, flood insurance costs go up. However, the earlier an insurance company identifies flood risk and begins pricing its products to reflect that reality, the more likely it is consumers and homeowners will incorporate those higher costs in their home buying decisions, and then the less likely they are to be susceptible to that risk. The earlier the better, always.
Merci beaucoup, merci pour ça.
Thank you. You're also a member of the Central Bank for the Greening of the Financial System. This is a very important topic. I quote from their report,
Would have severe and sudden impact on the economy and hence on the financial system. On a parlé beaucoup des risques des changements climatiques.
we've talked a great deal about climate change risks, but what about biodiversity? This has recently been identified as being as important. What are the severe impacts of this on the banking system?
We have done some initial internal work on the risks of biodiversity, Mr. Chair, and our view is as follows. It is still a fairly under-quantified risk, not just in terms of our technical focus, which is credit risk and liquidity risk and all that, but in terms of its impact on the economy. As the Bank of Canada progresses its work into biodiversity loss, we'll have to think about that and do some scenario work and to determine how biodiversity loss might affect might have second or third order effects. I'll leave it there.
Et aussi dans votre chapitre 2,
In Chapter 2, you give guidelines with respect to communication of information and climate change. There's a lot of work that's being done currently on taxonomy. You said that the BARD, the FSB, is doing this. Can you describe what is going on in this sector and how are you involved in this important work of taxonomy to ensure that me and my fellow citizens who want to invest in sustainable products are going to be sustainable products, particularly when we talk about greenwashing? I'll ask Mr. Tardif to answer that question.
The work of there's a huge ecosystem around disclosures and taxonomies and classification of investments and assets around the whole spectrum of ESG. And what you've seen in B15 and Chapter 2 is we point specifically that we will update B15 once the ISSB publishes their final standards, which is expected this summer. So that's the link to ISSB. We will point to ISSB. We are also very supportive of the work of the development of a sustainable finance taxonomy in Canada. And we think that any efforts to better classify and categorize investments will help ultimately with prudential risk management. And so, although we're not involved in the development of a taxonomy, we support that work.
And now to MP Samari, please, for 2.5 minutes.
Merci, Monsieur le Président.
Thank you, Mr. Chair. I'd like to ask you a question about the dynamics between zombie institutions, or the links they have with them, and the climate change risk. You must know that the study done by the International Regulatory Bank, updated in 22 on these institutions in Zone B, and given the nature of these activities, several financial institutions are grappling with the management of debts from these businesses. And how is climate change risk for financial institutions? How is this being dealt with, in your opinion? What are the implications of all of that?
Companies that are affected, non-bank companies that are affected by climate change. Just a point of clarification. Or banks affected by climate change.
I'd like to have your opinion on how the financial institutions are going to manage climate change risk, and the fact that in their portfolio there are a lot of zombie businesses.
The phenomena of Mr. Chair, the phenomena of what is referred to as zombie institutions, which are institutions that have financial statements that indicate that they're a going concern, but in effect are not acting as going, or are not in fact going concerns. I think in terms of managing that risk for financial institutions, and assume for a minute the zombie institution in question is turned into a zombie by some sort of form of climate risk. A financial institution has agency, has the ability to deem that loan to a zombie non-performing, and then leverage the courts to work it out. What it takes at the financial institution is a will to act. Our job in putting together bank regulations, whether it's in respect of climate risk or credit risk or what have you, is to create a series of expectations and principles that causes our institutions to identify problem credits and work them out faster.
Thank you, and merci, MP Samari. And now MP Blakey, please, for 2.5.
As the data reporting and analysis of climate risk improves over time, not just for particular investments, but also for the kind of economy-wide impact, do you think either in terms of, whether it be the kind of principles-based guidelines that OSFI issues, or more organically within institutions themselves, that we might see an effort to push for the creation of products that help mitigate that economy-wide climate risk? So, for example, when consumers are getting a mortgage? Like, could we see being able to make a case that financial institutions make it easier or consult proactively with mortgage clients about, if they're purchasing a new home, trying to increase the insulation of the home, change to an electric furnace, a geothermal heating system, for instance, as a way of trying to reduce those economy-wide emissions and reduce economy-wide climate risk? Or do you think the focus will continue to be on a particular business for itself and its own emissions impact and its own climate risk? Or do you think that there may be ways of getting to use this data and these better practices for economy-wide impacts?
Yeah. Mr. Chair, what we would focus on is just simply our banks quantifying their exposure to climate risk and then building it into their risk management. Individual financial institutions, be they banks and insurers, as a result of that analysis or other work, may incorporate that into their product design and their product pricing. And that wouldn't be unusual. For example, typically homeowners, if they put in place a security system, have a lower insurance premium. Yeah. So could that happen as sophistication around our understanding of climate risk improves? Yes.
Thank you very much for that. If I have a little bit of time, or 30 seconds?
Yeah.
Very quickly then, I'm interested in the conversation you're having with banks right now about these extended amortizations from the point of view of what both financial institutions and consumers should be doing to prepare for the renewal period. If interest rates haven't gone down significantly, but even if they have, presumably in order to get that amortization back down to what it ought to be at renewal, there would be significant hikes in the fixed payment.
Mr. Chair, briefly, we know what it would take to bring the amortizations back into line. So do the banks. What we ask them to do is get ahead of that early. Many of these mortgages were written just a year or two ago, and so there is 3 years because typically they're 5-year contracts. We have some time to get this handled. We ask them to get on this early, as does the FCAC. Their mandate is more to ensure consumer fairness in adjudicating that issue.
Thank you for that. Thank you, MP Blakey, and I think the MP Chambers, yes, for 5 minutes? Yeah, MP Chambers.
Thanks. I'd just like to follow up on Mr. Blakey's last questions there. How much of the mortgage market does OSFI regulate?
How much of a what?
The mortgage market does OSFI regulate today? How percentage? Isn't it about 80%?
Roughly, yeah. Yeah, roughly about 80%. It's probably 1.8 trillion total, and the banks or the institutions we regulate about 1.5. Right. That's broad numbers.
And so last appearance, we had a brief discussion on shadow banking. Are you any closer today to understanding some of the risks that exist in that sector, which you currently don't have a full line of sight on? Do you have more insights into what's happening on that side?
Mr. Chair, by shadow banking, we're talking about unregulated lenders into the housing market.
Correct.
As opposed to, say, mortgage securitizations and all that. Okay. Mr. Chair, through the data gathering of the Bank of Canada and Statistics Canada, I would say we can capture and measure probably 80% of unregulated lenders through just periodic data gathering, right. And that tells us that part of the sector is still about 1%.
But do you know what is happening with amortizations in that sector, or how those institutions are dealing with the same issues that the banks that you do regulate are dealing with them?
Mr. Chair, many of those entities you talk about raise money from the public and do make some form of disclosure in terms of what they're doing. From what we've been able to gather so far, they're tending to be less prone to flexibility.
Right. But isn't it more likely than not that a large financial risk event to the system comes from the 20% of the market that you actually don't have a great line of sight on or influence over?
Right. Mr. Chair, the 20% you talked about, 1% of it would be these unregulated lenders, mortgage investment corporations. Most of the rest are credit unions, which are regulated by provincial regulators. And while they don't provincial regulators don't perfectly and identically adopt OSFI guidelines, they're pretty close. And I talk to provincial regulators semi-annually.
You're comfortable with the current?
I'm comfortable with the 19%. The 1%, it's worth watching, but it is still small.
So do you think the new B20 guidelines are going to push more people into the 20% space or the 1% space if they become more onerous?
Mr. Chair, the evolutions to B20 that we're currently considering are still in development, and we're consulting with the institutions we regulate to ensure that that type of unintended consequence does not happen. That's why we do consultations.
Fair enough. And has OSFI have a view or modeled what they think house prices would correct to or could correct to over the next 6 months?
Mr. Chair, I was a financial analyst for many years, and predicting housing markets, I probably have a higher error rate than any other prediction I made. So,
fair enough.
Bluntly
The question
put,
is,
no.
No. I mean, fair enough. I mean, with respect, I mean, you did give an interview.
Yeah.
You were on a podcast, and you said
Yep.
that Canadians could expect to see a 20% correction in real estate prices. That was in August of, I think, 21 or 22, or 22, sorry, just 8 months ago, 10 months ago.
Call it a year.
Call it a year. It was in any event. Yeah, it might have been a year.
Yeah.
So is that the OSFI's view? Was that kind of your analyst view?
Mr. Chair, on memory, what I believe I was saying is that given the pressures in the economy, the pressures with inflation, I could see a scenario where house prices in specific cities could fall by 10 to 20%. And the spirit of the answer to the question was Canadians should prepare themselves for 10 to 20% corrections in home prices. We stress test far beyond that.
Fair enough. I have a limited time, and I have one final question. Would house prices fall more or less if amortizations were not being extended?
Mr. Chair, contractually extending amortizations are happening as a result of the contractual provisions in the mortgage product.
If they could not do, if the banks did not have that flexibility, would they fall?
I know,
more
but
or
that
less?
is the time, and I think Mr. Rutledge has answered very well for many of the questions that he's gotten in the last minute.
Provide that answer in writing to the committee?
That's fair.
And
That's great.
an analysis if you would like the additional space. Thank you.
Yes.
Appreciate that.
Thank you, MP Chambers. Our final question now, we're going to MP Turnbull, please, for 5 minutes.
And interesting line of questioning there, maybe getting back to the green finance topic. I'll just ask a few questions about the B15 guideline to start, which I've read and reviewed. I think it has many merits, and I'm really happy to hear that it's evergreen. A few of the comments with some of the stakeholders across Canada that I've spoken to, in particular some of the environmental groups, they've talked about double materiality, this concept that we often assess risk on financial institutions, often assess the risk that is kind of coming in due to climate change, but we also should be looking at the outflow of the actions and activities that financial institutions are responsible for in terms of allocating capital and keeping us on track with achieving our net zero commitments. So this is the flip side of it. Do you think that the B15 guidelines in some iteration in the future will take that into consideration as well?
So, Mr. Chair, just the question is, would we alter B15 to reflect an intent to shift allocation of capital away from one industry to another? Fair?
Yeah, perhaps. Or, I mean, I think there's multiple questions in there, but yes.
Mr. Chair, the answer is no, we wouldn't do that. What we aim to do with our analysis and with our guidelines is to ensure that banks and insurance companies and financial institutions are quantifying climate risk and managing their book in a responsible way. As a byproduct over time, could that cause a shift away from greenhouse gas emitting energy extraction towards renewables? Yes, could. But that is not what we set out to do. What we set out to do is create a financial system that's resilient to climate change.
Would obliging them to allocate capital in accordance with the fundamental principles of addressing climate change not achieve greater stability within the financial system, though, and therefore be within your mandate?
Mr. Chair, we have a strongly held view that in pursuing climate change as a financial system risk and ensuring that banks are managing it and quantifying it appropriately, that outcome, which is an outcome you would otherwise seek, will occur. From our perspective, we're prudential regulators. We want to ensure our financial institutions are managing their risks intelligently and appropriately. We don't want to be seen to put our thumb on the scale for any one particular risk area.
Thank you. What about transition plans? So I know there's been conversation about those. Those are not explicitly required at this time within the B15 guideline, but many internationally have talked about the importance in terms of climate risk governance. That financial institutions be obligated to create and be accountable to transition plans. Would you agree with that? And do you think that that would be included in a future iteration of the B15 guideline?
Mr. Chair, I'll ask our B15 expert to answer.
Thank you, Mr. Chair, for the question. So I would just correct the committee that transition plans are required in B15, which is, and what we've also added, which is different than other jurisdictions, is that the transition plans also consider not just transition risks, but the physical risks. So you'll see in B15 specific reference to transition plans, mandatory transition plans, including physical risks. So I'd just like to correct the committee on that observation.
Great, thank you for that correction. In terms, I also understand that we're trying to create a holistic system here to manage climate risk. We've heard that SFAC is working on the taxonomy. There's some really great foundational work there. We know your B15 guideline hasn't come into force yet, but hopefully will soon. We know the Canadian Securities Administrators also have a 51107 national instrument. What is missing? I've heard that SFAC, contains 25 of the largest financial institutions that are federally regulated in the country, and they're asking for mandatory disclosures. Is that another piece of being able to manage risk, and does OSFI support their ask for mandatory disclosures across the entire Canadian economy?
Mr. Chair, by their disclosures, you mean the SFAC's councils?
The Sustainable Finance Action Council, my apologies.
Mr. Chair, transparency trumps opacity every time in financial services. So any activity by responsible counterparties in the system that coax, nudge, or otherwise mandate more transparency will generally make risk management, will generally improve risk management. As a prudential principles-based regulator, we don't do mandate or rules. We do guidelines and principles-based regulation, and we will never change that. It's important I say that for my regulated constituents.
Thank you. Thank you, MP Turnbull, and welcome to our committee, MP Turnbull. We want to thank OSFI, and we want to thank Mr. Rutledge and Mr. Tardif for the many questions that they answered on behalf of our committee. And many of them were rapid fire here. But we did get a lot of information, and we really appreciate your testimony for this study. Thank you very much. Members, we're just going to suspend quickly to bring in our second panel. Thank you. Resuming our meeting, we do have our witness here for our second panel. And our witness, Ms. Christine Bergeron, who's the President and Chief Executive Officer of Vancity. Welcome. You are coming to us remotely. I understand you've been tested and everything is working well with your sound. So, Ms. Bergeron, you'll have an opportunity now for some opening remarks for the members. Thank you.
Great. Good morning. Before I begin, I wanted to acknowledge that I'm speaking from the unceded ancestral territories of the Musqueam, Squamish, and Tsleil-Waututh First Nations. They've been custodians of the lands here for thousands of years, and so I wanted to pay my respect to elders, past and present. Je vous remercie de m'avoir invité aujourd'hui à vous parler de finances et d'investissement.
I'd like to thank you for inviting me here today to talk about green finance and investment, as well as transition finance and transparency.
Green finance. And we have been a leader both in disclosure and in thinking about how climate change and social issues are tied together. Climate change is an urgent threat to Canadians in every province, including Vancity's more than 550,000 members, and the communities of British Columbia, where our members live and work. Climate change is costing Canada's economy billions of dollars and counting. While some Canadians can afford to adapt their lives to the climate challenge, many Canadians cannot. The climate challenge and the affordability crisis go hand in hand and are making each other worse. In research that we partnered on recently, 30% of British Columbians, so almost 1 in 3, reported being impacted by extreme weather events in the last 1 to 2 years. So for us in British Columbia, that's floods, fires, heat domes. 56% of British Columbians who reported such an impact also reported high financial stress. So businesses, including financial institutions, have a major role to play in addressing these challenges, and many are willing to step up. The net zero journey towards a sustainable economy is one we must all take. Government and regulatory action is essential to enable all of us to achieve our net zero goals faster and more effectively. At the same time, We can't lose sight of the affordability challenges that many Canadians are encountering, both in terms of the rising cost of living and in terms of housing affordability. And so, from our perspective, the climate transition will fail if some Canadians are left behind in the transition. And yet, affordability is unachievable if we also don't transition to a clean and sustainable economy. The two challenges are inseparable. On green financing and investment, to begin in comparison to 10 or 5 or 3 years ago, tremendous progress has been made more broadly in capital being allocated to sustainability. And so encouraging and growing green financing and investment in Canada, it's an important part of the climate transition, and we need to continue to see an acceleration of this capital allocation. Vancity is an active member and participant of the Sustainable Finance Action Council, which is working to provide recommendations to the Government of Canada to help transition the economy as quickly as possible, including capital allocation to achieve net zero. So simply put, we believe, we need to transform the economy to one that protects the earth and guarantees equity for all. As we transition to net zero, we also need to pay close attention to how funding for sustainable initiatives is employed. So first, the right voices must be at the table as we transition the economy. If we rely on the traditional modes for capital allocation that have excluded too many Canadians in the past, we will end up with a low carbon economy that's even more inequitable and potentially leaves workers behind. In addition to thinking about different modes for capital allocation, we also need to think about different frameworks, perhaps for risk and return with a climate lens. The work and progress done to date in green finance has also largely been done within our current risk and return frameworks. It's useful and very important, but it may be insufficient for us to successfully, as a society, reduce inequality or drop emissions sufficiently. So we do need more innovation in partnerships and collaboration, products, and policy. We believe consumers, investors, and actors throughout various supply chains are ready to make this transition, but they do need help in the form of greater climate disclosure, better data, and market signals that help to price the climate into our economy. You can take, for example, Vancity. We've set a goal of net zero financed emissions by 2040. The bulk of our emissions come from real estate, both commercial and residential. And as we've modeled our pathway to zero, it's become clear that between 80, possibly up to 90% of those reductions will need to come from some form of public policy support, either the ongoing implementation of new policies or the introduction of new ones. Not to mention that we need a system of standardized building labeling to truly measure our progress. And I know that we are not alone. Many private organizations are ready to act, keen to play their part in the transition, but like us, they need policies, data, and investments to help them get there. Transition finance is an important tool in achieving all of these goals. However, the devil, as the saying goes, is really in the details. We know that it is essential for financial institutions to work with heavy emitters to transition their business models to the clean economy. At the same time, we believe that this work must be accompanied by transition plans that are aggressive, credible, and transparent. The public should have confidence that a promise to transition brings with it not just financing, but also a fundamental and urgent change to the way we do business. And as part of that change, that we work collectively to ensure that workers who built these organizations are able to thrive and prosper from the transition, not be left behind. Small businesses must also be part of the journey to net zero. Consumers are making more buying decisions than ever based on a business's reputation, including its commitment to social and environmental issues. And this isn't just individual consumers, but also large.
Thank you, Ms. Bergeron. Yeah, and so I know we want to get, the members want to get to questions and want to have as much time to ask you questions as possible. We are going to start right away with our first round of questions. We do have the Conservatives up first, and that's MP Morantz for 6 minutes, please.
Thank you, Mr. Chair, and thank you, Ms. Bergeron, for being here virtually speaking. It's been a very interesting study on green finance, and I must admit it wasn't a topic that I knew much about before we embarked on this study. You talked about affordability in your opening statement, and I realize that British Columbia has its own carbon tax. It's not a backstop province. But recently, the Parliamentary Budget Officer came out with a report which basically said the opposite of what the government has been telling us about the affordability of the carbon tax. They've been telling the public that the carbon tax is essentially neutral in terms of their pocketbook. It's cash in, cash out. The parliamentary budget officer now says that in most provinces, families will be out of pocket over and above the rebates by $1,500 to $1,800. I'm just wondering if you're concerned about the affordability crisis. Do you think that revisions need to be made, or that the carbon tax needs to be scrapped in order to ensure that Canadians can afford to eat and heat their homes and pay their mortgage payments?
Thank you. From my perspective, what we are concerned about is the combination of affordability along with climate impacts, knowing that additional financial stress occurs on those who are being affected by climate in addition to affordability. So as a financial institution in British Columbia, I don't have a perspective specifically on carbon tax as it relates to individual homeowners.
Again, in terms of affordability, in the fall economic statement in November, the government levied a new tax on financial institutions. They called it a one-time tax. I think it was a pandemic dividend, they called it, or something like that. I believe they collected about $15 billion from the major financial institutions. Is that something that you in your capacity as the head of Vancity would feel comfortable, and an organization like Vancity also paying?
So we are provincially regulated and have various tax, provisions. We certainly want to pay all taxes that we need to pay. So that's, largely our perspective is to contribute back as we can.
But on the same level as the major financial institutions?
I'd have to look at the details, but my understanding is we are, taxed appropriately for the size of institution and the revenue and profit that we have.
Yeah, I want to turn to your website talks about eco-efficiency loans. I just wonder if you could explain that program a little bit. For example, if somebody comes and they buy like a 100-year-old home that's got poor insulation and is basically a nightmare in terms of carbon emissions, would they qualify? Would that homeowner qualify for an eco-efficiency loan?
And for eco-efficiency loan, are you referencing a specific federal loan?
No, well, your website talks about a program called eco-efficiency loans. Actually, they're business loans. Maybe a home isn't the right example, but are you familiar with that program?
Sure. I can speak to some of those examples of our products.
Yeah, so mainly because I have limited time, what I'm curious about is whether someone who's applying for an eco-efficiency loan for a business would get preferential terms in terms of interest rates, fees, amortizations, that kind of thing, over a conventional business loan.
Broadly, we have been piloting various different programs and products to understand how we can support people to transition if they're interested in doing retrofits. Largely, it's related to retrofits. We have looked at pricing, we have looked at terms and conditions, but typically these are pilot projects where we are working with a specific business owner. We do not turn people away, to your question on depending on what their business is like, but we do work with them and we want to work with them on transition plans.
And how much more time do I have, Mr. Chair?
Over a minute.
A minute. Just in terms of the nature of some of these loans, for example, say a First Nation group came and they wanted to have an oil well, or they wanted to drill, or for natural gas, or to build an LNG facility, or they wanted to develop a mine on their property for critical minerals, that sort of thing. Are those the types of loans that Vancity continues to do?
So Vancity, in our history, we have not funded oil and gas projects. That's simply largely initially due to where we are located and the types of lending that we do. The vast majority of our book is real estate, commercial mortgages, et cetera. So we don't fund oil and gas projects. We do work tremendously with First Nations on different projects that they might have. So we would look at everything on a one deal basis to see what it is that they're looking to develop and how we may be able to support. But if it was purely, oil extraction, we would not.
No. Okay. Thank you.
And now to the Liberals, MP Chattel, please, for 5 minutes. 6 minutes, sorry.
Merci beaucoup, Monsieur le Président.
Thank you, Mr. Chair. And thank you to joining us this morning for this important study. I often walk around my riding, meeting with citizens. I hear them say that they're very concerned about the banking system. They look at what's happening in the U.S. and Europe, and they're wondering, are we okay here in Canada? And I say, I reply by saying we have one of the best banking systems in the world. The OFSI, the superintendent said earlier that we had good regulations here in Canada for the banking system compared to what they have in the United States. We've seen what's happening there. And OFSI also talked about the importance of having good regulations in the financial sector, including climate change risks. Do you agree with the testimony provided by our colleague from OFSI earlier, who said that it was very important and that it is very important that we consider climate risks for the health of our financial system?
Yes, thank you. Yes, we are supportive of including climate risks in broad regulation.
You are one of the first financial institutions to become a member of the Net Zero Banking Alliance. I was very intrigued about this. Could you tell us what this alliance does globally? And this does come under the umbrella of the UN. I'd be interested in hearing what you have to say about this.
Yes. So we were one of the first to sign on, and we are one of the first to have a net zero target that is more advanced in timelines. And this is, first of all, to ensure that we are, credible in our own work as we move this forward, because we see the risks to the economy. The Net Zero Banking Alliance, and then more broadly, the work with the UN, is really, the value is in first collaboration with institutions around the world. There are many doing really great work around disclosure, around product innovation, around collaboration with government. And it's also about working towards better standardization and better disclosure. And those are elements that I know was spoken to in the previous panel. We agree in terms of the importance of transparency, but we also think that standardization and the ability to have those discussions outside of our own jurisdiction are also very important. So that's why we contribute. We are not as large of a financial institution as many others in Canada. And so it does take our resources to do this, but we think it's important. And it's why we've been doing the work for many years prior to it becoming, more understood in terms of longer term risks to our own membership.
Madame Bergeron,
Ms. Bergeron, very quickly, you talked about the need for transparency and the importance in stating the risks as we transition to a greener economy. If we compare Canada to England and Europe, which have made a lot of progress in this field, are you concerned about the situation here, or do you think that we are going to be able to play catch up?
I think that we have been making significant progress. I do think that the different councils in place, the work being done by regulators, that we are catching up. We have certainly heard that from other jurisdictions, that they want to ensure that we're at that same level, but we have seen tremendous progress.
Et juste rapidement, si
And very quickly, if we don't catch up, do you think that foreign investment will turn towards Europe rather than here?
That's difficult to say, but what I can say is that we know that money and flow of funds want to flow to areas that have certainty, that have good disclosure, and where there is understanding of those longer term risks. So depending on how Canadian institutions disclose, that would then be outcomes that would flow from that.
merci, puis grâce à des institutions.
And thank you. Thanks to financial institutions with good leadership such as yours, I'm sure that we're going to be able to catch up and increase our economy. Thank you very much.
Chatel, and now to MP Sainte-Marie for 6 minutes, please.
Thank you, Mr. Chair. Good morning, Ms. Bergeron, and thank you for participating. I have several questions for you, but just beforehand, I'd like to make 2 comments. First of all, I know that the motion that was presented by Adam will not be debated today, but before the labor conflict, we were told that the offices are that the CRA is already finding it very difficult to meet deadlines. Other offices have had to deal with the ice, the freezing ice storm that occurred. They were without electricity. So the accounting offices that are located in these regions have already called us to say it was already hellish to meet the tax filing deadlines for our clients. Now we've got a scarcity of labor. We were without electricity for a week. And on top of that, there's a labor conflict. So I just would like to tell I'd just like to say that we'll be supporting this motion. Secondly, I would like to point out the exceptional work done by the analysts and the documents that they provide to committee members. That's particularly when it comes to financing. So I'd like to thank the analysts for the work. Now, I'd like to go to my questions for Ms. Bergeron. Thank you once again for coming here. I would just like to be assured of one thing. Is your financial institution come under the Office of the Superintendent of Financial Institutions, or do you report to a provincial body?
We are provincially regulated by the BC FSA. We do have a fully owned subsidiary bank called Vancity Community Investment Bank, which is regulated by OSFI, but it is small by comparison on asset basis to the credit union.
OK, merci beaucoup.
Thank you. In connection with that, I'd like to hear how you respond to the BF guideline regarding climate change. I'm referring to BF 15. How did you react to this? What is your analysis of it? How can smaller financial institutions such as yours that also have to report to provincial bodies, how do you respond to this BF 15?
Thank you. So although we are regulated by the BCFSA, we often do take into account OSFI's guidelines. We are still a large financial institution. So for example, we do stress test, and we are supportive of the B15 guidelines. We already disclose our emissions, and we've been doing a lot of work to better understand Scope 3. We do not yet have the best data, so we are working on that. And we have conversations with other financial institutions across the country. And so, yes, it does take resources, yes, but it's important. And for us, it's extremely important as we think about twofold. Climate risks on us as an institution, and then the emissions that we are part of in the lending that we provide to our members.
OK. C'est vraiment très intéressant.
That's very interesting. Thank you for your answers. Given what you've just said, do you feel that the delays suggested by OFC with respect to the data that needs to be provided, or do you think that the timelines will give you enough time to comply with these guidelines? And I also have a question about whether smaller financial institutions are treated equitably by OFC. Thank you.
So from our perspective, if I understand the question, so please correct me if I'm not answering your question, we feel that the timelines are sufficient. Does that mean that we were going to continue to need to improve our data collection? Yes, we need to continue to improve data collection. And the issues that come with that is that we need to, find a lot of that data from small businesses and from our membership. And so that will continue to be something that needs to occur. So we are supportive of those timelines. And in terms of whether small institutions are treated fairly by OSFI, I can only speak to the small bank that we have as a subsidiary, and we don't have any issues in how we are treated by OSFI.
OK, mais je suis vraiment ravi d'entendre.
Thank you. I'm delighted to hear your answers. I have about 1 minute remaining in my time. I want to make sure that I've understand correctly the costs required to adapt to this new standard are, in your opinion, necessary, given the issues involved with climate change. So I would just like to have confirmation about that. And in your presentation, you said that it's important to have an aggressive transition plan, if I understood correctly. Perhaps so I would like you to elaborate on that. And once again, thank you.
Certainly, thank you. On cost, it's difficult for me to speak on behalf of other financial institutions. I can say that we believe it is important, given the overall risks that we'll see in the long term as we think of long-term sustainability of a financial institution. We've also been working on it for many years, so we've had these costs over time. If someone is coming in new to it, that will be a different piece of work that they will need to think about, and they'll need to resource that accordingly. So I can't speak to where they are in that work. But for us, we think it's important. And secondly, I'm sorry, your second question?
Yeah, so that's that. We've actually surpassed the time, so we're just gonna move. Thank you, MP Saint-Marie. We're moving to MP Blakey for 6 minutes, please.
Thank you very much. So first of all, I just want to thank you for being here. I think it's really inspiring to see a financial institution that is taking climate risks seriously, not just from the point of view of its own interest, but also I think what I'm hearing in your opening comments and already some answers to questions is a sense of responsibility to kind of the economy-wide effects of climate change and a sense of the role that financial institutions can and I would go so far as to say ought to play in that kind of economy-wide mitigation of the costs of climate change. So thank you for that. I guess in line with that, we just had folks from OSFI here, and we were talking a little bit about how the work that financial institutions, some are just beginning to do, others have been doing for longer, the work that they're doing to develop kind of climate scenario analysis, how that could be mobilized eventually in order to be able to try and figure out the role that financial institutions can play in lowering emissions economy-wide. And I'm wondering what you think about that. We can certainly imagine folks saying, well, that's really not the business of financial institutions. They should just pay attention to the bottom line. They should only be concerned about climate risk to the extent that it hurts their own return on investment. But what I've heard from you is that your institution is engaging in some work to try and help clients lower their emissions. And I got the sense that that's maybe not just to protect Vancity's own return, but also that there's a sense of larger responsibility there. And I'm wondering, does that mean that if financial institutions are interested in being a positive force in reducing emissions economy-wide, do you think that it's a zero-sum game, that that's just a cost they have to take on out of the goodness of their heart? Or do you think that they can do that by developing products that do realize a reasonable return for the institution and for its share owners, whether that's share owners of a credit union or share owners in the more kind of traditional sense?
Yes, thank you. So for us, Vancity is member owned as a credit union. And so we know that our members want us to think about climate transition broadly, right? And getting to net zero. We also know that for us to hit those targets, we cannot do that on our own. And we need our members to act. Ultimately, as a financial institution, we are the intermediary. The client, the member, needs to be the one to act. So we are working very hard on products and services and partnerships that will allow them to act and make those changes, which many want to do, but don't know where to start. I do think that broadly, there's a very large opportunity. Opportunity is always the other side of risk and vice versa. And so, yes, we believe that there are going to be new ways to think about products, to think about how to enable and help business owners and individuals. So although thinking about the risks is extremely important, it's one element of the work ahead.
So you had mentioned in your opening comments, I believe, the need for a kind of more universally accepted building standard in respect of, I suppose, our value and emissions overall. I'm just wondering, I mean, if we were to have that in place, and I'm not suggesting that we have to wait for it either, but I mean, is there opportunity, if we're thinking about like a mortgage product, for instance, to try and think about structuring a product that incorporates and consults the purchaser of a new home proactively about the cost involved in incorporating some of those costs into the mortgage of upgrading insulation in a house, changing the heating system, installing maybe like solar panels particularly if there's a two-directional metering system. Like, is developing a product like that just a risk for a financial institution, or is there actually some real opportunity in that? Like, I think we're used to seeing this as like an extra expense and something that is just going to cost money. But is there a way, and particularly if the industry comes along with better standards, and if it's incorporated more into the regulatory environment, are there opportunities for money making for financial institutions in this? And are there opportunities for savings for consumers, even as the financial institution that's funding these things is making money?
Mm-hmm. Our view is yes. I would say largely those products are certainly being put together and thought through. We've done a few. Again, we're piloting and trying to really understand what fits for an individual or a small business. For example, we know that our members really want to retrofit their homes, but typically it's very complex and people don't know where to start. And so we've piloted a program to say, we will give you a free consultation on what that could look like for your home. There's no strings attached to that. Certainly, yes, we are a business. We would hope that perhaps they would then come to us for that lending, but ultimately our goal is to see emissions drop, first and foremost. So there are products where we can look at that. It's been difficult to look at lowering a price, for example, if you think 18 months ago when our mortgage rates were very, very low. And but those are different mechanisms, terms, conditions, et cetera. And ultimately that pulls in risk, right? Financial institutions price for the risk. And I think what we are seeing is much more thought around short versus long-term risk. And what does that look like? And consumers are getting much smarter as well in doing their own math that yes, there's an upfront cost, but over time, that life cycle cost does end up being a savings to them.
Thank you very much.
And we're going to try and get through a second round here, so we're starting with MP Chambers for 5 minutes, please.
Thank you, Mr. Chair. Welcome to the Finance Committee. Appreciate your testimony here this morning, and also want to publicly thank the analysts who did some good work in the briefing note to help committee members prepare for this meeting, as they do for many meetings. We just had OSFI in here talking about one of their guidelines for financial institutions, and there was a bit of a discussion around whether it should be up to financial institutions themselves to decide the kinds of risks that it would like to disclose to its members. I note that in Vancity's circumstances, obviously you have some shared values along with your members that you probably have. It's a source of maybe competitive advantage for you amongst as you try to collect members, as you position yourself against other similar entities. Would you view that as an appropriate observation?
I would call it differentiation, perhaps, more so than competitive advantage. But we tried to respond to our membership because we're member-owned. You're correct. It is a very different model, though, than the larger banks with shareholders.
So really, I think the question is around should we allow institutions like yours to develop their own approaches to these issues, whether it's disclosure, whether it's more restrictive lending standards like you obviously have, as opposed to having a government pick a set of regulatory matters and kind of force them on an industry? Or really, I'm really getting at, you've developed something that differentiates yourself in the market, and now government is kind of getting in that space and telling your institutions and similar to yours how they should be approaching that issue.
Thank you. I would say that it is difficult sometimes for people to understand that although it is a differentiation for us, we can achieve all of our goals, and ultimately our society will not be any different in terms of emissions and effects by climate because of our size. So for us, standardization and broader transparency and more reporting is a good thing collectively. What we're seeing are guidelines to support more consistent reporting. The reporting that we do, we pull it from PCAF, which is Partnership for Carbon Accounting Financials. It's an international, accounting standard. And so again, others are doing this, and we're supportive of more people reporting and being transparent.
Thank you for the honest response. Have you had experience with or any of your members have had experience with the government's green energy rebate program? It seems like you're involved in some of the housing discussions with members about how to retrofit their homes.
I'm sure that we have. I've not personally been involved in specific discussions with members on it.
Okay. I note that you offer a free, it sounds like a free assessment. Is that correct?
That's correct.
Okay. The government program, you have to pay about $500 for an assessment. You only get it back if actually what you put in qualifies, and then you try to go and find out what qualifies, and it's a list of like 1,000 different permutations. It's actually very complicated. I was going to ask whether you think that should be simplified, which would make it easier for your members to actually access some of this program funding. I mean, since you don't necessarily know that in advance, but would you agree with that generally, that it should be a simple program, maybe like you, having a free assessment?
Well, I can only speak to what we really offer, and the reason that we are doing it that way is, again, what we've heard from our membership, and we try to respond. We give back 30% of our profits every year through distributions to community to have impact in our community, and so these funds come from that pool of money to support our members.
And now to MP McDonald, please, for 5 minutes.
Thank you, Chair. And Chair, I'm going to share my time with P.S. Beach, and he would like to go first.
Thank you to my colleague, and thank you, Mr. Chair. Through you to our witness, I'm happy to share that I reside and am currently on the same traditional territory as yourself. And I've been appreciating your testimony so far and the work that Vancity does in our community. But I do have a small piece of business that I need to address. I'd like to thank all members who participated in the technical briefings on the BIA earlier this week. The BIA will be tabled later this afternoon. And as we've done in previous years, I think it would be beneficial to commence a pre-study so we can hear from officials and stakeholders on this important piece of legislation. I've been able to discuss the motion with members from other parties, and I'm hoping that we can deal with this quickly and go back to our witness. So I move that should a Budget Implementation Act be tabled in the House, the committee commence a pre-study of said legislation, and that the committee invite officials to provide briefings on the contents of the bill, as well as the Deputy Prime Minister and Minister of Finance. Thank you, Mr. Chair.
Thank you, P.S. Beach. Members, any discussion? Yeah, MP Chambers.
I'll be brief, just 2 quick points. The first is I think the committee would benefit from some more subcommittee meetings. The second is, I will note, we had the Governor of the Bank of Canada here earlier this week for the 4th or 5th time. The Minister of Finance has yet to appear on an invitation other than coming for legislation on her behalf. So if we want the committee to work really well, and we won't intend to take up time, I would just note that we have to start thinking about how invitations work to ministers from our committee, and whether those invitations are treated seriously or not. And the second point on the technical briefing, which was well done by officials, there's no simultaneous translation on these technical briefings, or at least I couldn't figure out how to get it. And the technical briefing was offered immediately after receiving the multiple 100-page document. So I think we should also talk about that as well, and maybe one of these subcommittee meetings, but won't take up more of the time on this point. But wanted to get that on the record when we're talking about a pre-study and trying to make it work more smoothly for the committee going forward.
Okay. Yeah. Any further discussion on PS? Yep. MP Blakey.
Just to say quickly, I agree with Mr. Chambers about. I think we'd be a sign of goodwill for the minister to appear outside the context of studies of her own legislation and to respond to the committee's longstanding invitation now to appear in the context of the inflation study, I think is the extant invitation. So I express my support for that. I'll say also, and this may be part of what Mr. Chambers is driving at in terms of subcommittee meetings, but I do think there needs to be some discussion of the letter that we would send to other committees if we want to have a process that involves the subject area expertise of other committees. I'm certainly concerned to see that happen soon, so perhaps that's a conversation we could have no later than Tuesday. And again, to the point of having briefings quickly after tabling legislation, I mean, I do think it would be nice to have an opportunity closer to the back end of the process to ask questions of officials, because I think we can ask better questions of officials once we've had the benefit of witness feedback. All that said, I'm prepared to support a pre-study. I think we've had this conversation around the table a couple times now in this Parliament, and budget implementation acts tend to be large bills, and I think Canadians are well served when we take the time to study it well. And so I think starting that study sooner rather than later, especially if we do, as I hope we will, consult other committees on some of the content of that bill, I think it's good to get it going. Thank you.
MP Blakey, MP Sainte-Marie, please.
Oui, merci, Monsieur le Président.
Thank you, Mr. Chair. I'd like to thank him for his motion. I think given the length of the legislative bill that we're going to be getting with the Ways and Means bill as well, I'd be in favor of beginning the study as quickly as possible. I'd also like to go back to the Ways and Means motion. I'd like to thank Terry for the briefing session, but what he raised was quite concerning. We received 500 pages plus 230 pages in explanations, all kinds of legal jurisdiction that's difficult to understand. So we got this briefing, but we couldn't understand everything that was discussed. And then we're going to ask people to have to vote on this. I feel uncomfortable doing this. I couldn't get through it. So I think we need to take more time for the Budget Implementation Act, also the issues raised by Adam and the invitation to the Minister of Finance to appear. I find this to be quite disappointing that we have so little access to the minister. So I'm in agreement with the principle, and I'd like to just reiterate what was already raised. Thank you.
And I have MP Morantz on the speakers list. Yep.
Thank you, Mr. Chair. Well, this brings back memories of what happened last fall with the Fall Economic Statement. My view of this is that we're still debating this in the House. There are speakers up, have been up all week. They'll be up next week on this legislation. It seems to me to be premature to be studying it in committee. We don't do that for any other legislation. I am also concerned about the wording of the motion, because last time the motion essentially prohibited us from asking broader questions about the budget itself. We had officials here who would not answer questions if they weren't specifically addressed in the BIA. But there are things also in the budget that might not be addressed in the BIA that we should be able to deal with if we do have a pre-study, or in any study of the Budget Implementation Act. So my preference would be to see the wording of the motion broadened to allow us to ask officials really anything we want, as long as it pertains to the budget and the BIA. Also, it seems to me that really the finance minister needs to be here more often. We're dealing with some very, very serious issues around affordability and taxation, and concerns about going into an economic slowdown or perhaps a recession. And we can't get the finance minister to come to finance committee. So that's got to be a priority. I would urge my colleagues on the government side of this table to try and make that happen as soon as possible, so that we can get her testimony on the record about serious problems that this budget fails to address. Thank you, Mr. Chair.
Thank you, MP Morantz. Just looking at the room, any further discussion? No? Okay, PS Beach? No? Okay, so to PS Beach's motion, members? Okay. Recorded? Okay, clerk?
Mr. Baker?
In favor.
Mr. Beach?
In favor.
Madame Chantel?
En faveur.
Mr. Turnbull?
In favor.
Mr. McDonald? Mr. Chambers?
Contre.
Mr. Halan?
Against.
Mr. Williamson?
No, against.
Mr. Moraz?
Against.
Monsieur Saint-Marie?
Pour.
Mr. Blakey?
Yay.
7-4, 4 against.
Carries. Okay. Thank you. And now, we're back to Ms. Bergeron, please. We were at Well, I guess we've gone way past the time. We will now move to, let's see, we've got, did I have MP McDonald? He had gone. Okay, MP Sainte-Marie is who we'd have on next. MP Sainte-Marie?
Je crois que les libéraux n'ont pas eu leur tour.
I don't think the Liberals got their chance to question Ms. Bergeron. Oh, so Mr. McDonald, if Mr. McDonald would like to have a few minutes to ask questions, I can give him my time.
McDonald does have 3 minutes, yes. Yeah. We will run over members. I think we're okay for resources. Yeah, okay. Yeah, we will run over time, yeah.
Okay, thank you. Ms. Bergeron, thank you for being here today. But last June, Van City announced 2025 financed admission reduction targets, and in doing so was the first Canadian financial institution to set those targets pertaining to commercial and residential real estate. And I'm just wondering, now we're just shy of a year. I'm wondering if you can give us an update, basically, on those targets and how that impacted your overall portfolio.
Certainly, thank you. We are continuing to do our work to build out the plans to get to our 2025 targets. Part of those targets included working with small business owners on transition plans. And so we will be disclosing and reporting back out fairly soon. We do that with our annual report, our second set of emissions reporting in addition to that work. So I can actually only say more to come because of the timing. But certainly it has not affected our portfolio specifically. Our intention and our work is more about working with our membership. It is not about exclusion. It is about new product solutions, different ways to work with members so that they can act and make the changes we need to see, in addition to looking at how we can finance clean energy and other areas. But it is very much an inclusionary approach, not exclusionary, for our membership and what we currently fund. So I did say that we don't fund a specific oil and gas projects as an example, but we're not excluding members who are looking for a mortgage as an example. We are working with them.
Thank you. And I think you stressed how important it is for your members, for your financial institution to be very progressive in the reduction of carbon emissions and climate change. And I just, what are the if you were non-active, like where would your membership sit, or what detriment would it be to your portfolio or your even further investing in capital markets and so on and so forth as you go forward? Like what are the issues that you would come up against?
Thank you. I think that's difficult to answer. We know what people, first of all, for two reasons. Members may say one thing, but we don't know how they will actually act after they've said something. But more importantly, would be that, ultimately for us, our members and our board and the vision that we have is to think about transforming the economy. So my assumption, which I cannot validate, would be that we would have members who would perhaps look to a different financial institution.
Okay, thank you.
Now to MP Sainte-Marie, please, for 2.5 minutes.
Merci, Monsieur le Président. Donc,
Thank you, Mr. Chair. So 2 quick questions. I asked you for details in your presentation. You talked about the importance of having an aggressive transition plan. So I wanted to hear your comments about the importance of having an aggressive plan. And I'd also like to ask you about the green projects. What about these traditional, conventional loans, such, let's say, that include things like interest rates, et cetera? What's the difference there?
Great, thank you. In terms of aggressive transition plans, our perspective is that we need to act. And the data shows that we need to act. And so we think it's important to be very clear on having objectives that will collectively get us to net zero and to drop emissions. We could put a target of 2080 instead of 2040. And certainly when that is the case, people tend to work to that target. And so our view is to bring it in and to do everything that we can to meet that. So the view is it's based on data and trying to achieve that. With respect to green projects and how we look at terms and conditions or pricing, again, we typically price for risk. And as was said, I believe, in the previous panel, it's difficult to look forward for risks that we don't fully understand versus looking back at traditional risks that we are used to. So we haven't, officially landed to say if we do this new product, we will definitely drop a price or term by a certain amount, because we are still trying to understand what those broad risks are. But we are trying to make it helpful to members because they do want to take these actions. So we're working with them to understand what levers actually matter to them the most. It may or may not be pricing. It may be something else. And so that's how we respond to our membership. We want to understand what levers we can pull, ultimately to see more of these green projects or financings get in place.
Thank you, MP Sainte-Marie, and MP Blakey now for 2.5 minutes.
Thank you very much. So it's certainly my hope, and it's typical around here, that at the conclusion of a study, a committee will write a report and make recommendations to the government based on what it's heard. So I'm just curious if you have, if there are components that you think should be added to Canada's regulatory framework that you would like to see this committee recommend to government when it comes to, managing climate risk better in our financial sector, and the role that financial institutions can play in helping to mitigate a more general climate risk.
I think what I would say is that the more we can continue to properly value and treat the risks of climate within financial models, which is difficult precisely because it's forward-looking, the more we will see a true step change in our ability to meet net zero targets. And I think also ensure that people are not left behind in that transition, which is very important. I don't have a specific regulatory recommendation for you, but certainly transparency and standardization are important.
Okay. Thank you very much for your time here today and your contribution to our study.
Yep, thank you, and thank you, MP Blakey, and now to MP Hallen for 5 minutes, please.
Any questions? I'll forfeit.
That's what I have on my list. MP Hallen.
Okay.
Ms. Bergeron.
Ms. Bergeron, when we talk about emissions and how to reduce them, in your opinion, would it be reasonable to say that replacing dirty dictator oil around the world with lower carbon intensive forms of energy would help the environment?
My comments would be that in order to help the environment, maybe I'll actually step back. The purpose of helping the environment is to help people. It's about how we can live within our environment. And hence, what the data has showed is that dropping emissions matters. And in order to drop emissions, we do need to see more renewable energy in place.
But today, when we see energy from places outside of Canada where there are no regulatory, there's no regulatory, there's no regulations on how that energy is being created, and many human rights violations being taken place for that energy to be created as well. Would it be fair to say that in today's date, Canada could be a leader in replacing that with lower in carbon-intensive energy?
I do think that there's a great opportunity for Canada to continue to build new technology, new innovation that is low carbon.
So would you agree that a place like Germany, who came to Canada looking for LNG from Canada, should have received lower carbon intense LNG from Canada instead of being turned away and going to Qatar that has lower regulations and lower human rights regulations? You think Canada should have been able to replace that oil and liquid natural gas with Canadian low carbon intense instead?
My area of expertise is really not in different international jurisdictions, and so I don't have a comment on that.
In regards to loans, what is the default rate on green loans compared to conventional loans?
What we have seen in our portfolio is we have not seen higher risk, if that is also part of the question in terms of default by green loans. We've been tracking our impact loans now for many years, and we've not seen any difference in default rates.
What's the percentage of green loans to conventional loans that you have?
The overall percentage of what we track as triple bottom line assets and assets under administration is approximately 30%. Give or take, it depends on the moment in time. We, however, also, our portfolio is also based on sort of doing no harm. So we, as I said, we don't have investments in oil and gas. So it's not specifically a ratio of clean to dirty, as some might think about it. It's what we track as having a positive impact in our community versus those that are perhaps considered more neutral.
Can you table with this committee the actual numbers of loans that are conventional compared to green loans, the span of how many years that's across, and the amounts?
Is a question whether I can do that today or if we can follow up. I don't have that data at my fingertips.
Yeah, I mean, if you could do that as soon as possible for the committee, if you can table that.
Certainly.
Thank you. How much time do I have? Okay. Thank you.
Thank you very much, MP Helen. And now we're going to our last questioner. We have a guest here. Welcome, MP Turnbull, to our committee, and seem very excited about this study.
Thanks, Chair, and thanks to Ms. Bergeron for being here. It's great to see you, and always have admired the work that Vancity does as a credit union, but also its community investment bank. Obviously, we know credit unions play a huge part, and that their community lending model and the way that they do things is quite different than some of our large financial institutions, and that has shone through in your remarks today. So I want to acknowledge you for that. I wanted to get back to a comment that you had made in your opening remarks about how we can't rely on the same modes of capital allocation. I know that Vancity, in my mind, both in social impact investment, but also in green or climate finance, has been doing remarkable work and is innovating. I think you're trying to get to a yes on every deal that comes before you, where you see a positive impact on society and the planet. So what are you doing to really innovate within your lending that is making a difference?
Thank you. I think that there are several things that we continue to improve upon, because certainly we're constantly learning. First is actually creating more feedback mechanisms to hear from members as to what is working and what is not. That's typically how we have innovated in the past. We continue to put pilot programs out and looking to collaborate. So how can we work with provincial governments, municipal governments, other groups, and also, a small business owner to think about how there are many different pockets of programs and money, how can those come together to think differently about the lending that we do? That's also about innovating. Many would not call it innovation, but thinking differently, which is innovation, around risk and what that looks like and what timeframes, so that we can perhaps price differently if that's what the risk indicators demonstrate. We also are trying as much as we can to bring in different voices. And so traditionally, there have been more male voices, for example, in capital allocation broadly, and trying to ensure that we look across our organization, from gender perspective, more broad diversity, and ensuring that we've got that at all levels of the organization.
Thanks very much for that. It's great to hear about the way you're innovating or thinking differently. In terms of your involvement in the Sustainable Finance Action Council, I know Vancity sits on that as actively engaged. What is your assessment of the contributions that the taxonomy on green and transition investment will make to our financial system? Can you speak to the value of that taxonomy in terms of lending credibility to our system here in Canada?
We think that it is important to have common language, to again have standardization, and for consumers to have trust in what we are going to call or not call something green. I believe there was previous discussion on greenwashing. Consumers are very, on the one hand, very aware. And on the other hand, it's very difficult for them to wade through the noise. So we do think that there's value in that. We also think that many of the next steps with respect to taxonomy are also important. So governance was one that I know are many of the next steps to come.
Great. And one last question. In terms of mandatory climate-related disclosures, I know there's considerable movement towards taking a holistic approach or an all-economy approach to that and having mandatory disclosures. Do you feel that that's really needed as a financial institution? I'm certain that decision-useful data must be hard to get in an economy where there's no mandatory disclosure for climate-related risk. So are you an advocate for mandatory disclosures?
We do believe that disclosure is important and that transparency is important. We also know that in order to get there, if to do that throughout, you have to start even with small business owners who are going to need resources and time to get there.
We thank you, Ms. Bergeron. Thank you, MP Turnbull. The bells are ringing for our vote members. But listen, Ms. Bergeron, we really want to thank you for bearing with us, for giving us the flexibility, for staying with us past the hour and giving us the full hour of your time. And thank you for your testimony that will help inform this this study. We really appreciate it on behalf of all the members of the Finance Committee. Thank you.
Thank you.
Okay. Have a great day. Thanks.
Thanks.